Some high-income earners think that they're optimizing their retirement planning if they're maxing out their 401k. But that's really like saying that you've mastered investing because you have a savings account. The truth is, if you're making over 500k a year and you're only using basic retirement plans, you're potentially leaving a lot of dollars on the table. Not in investment returns, in immediate tax savings. My name is Omar Morillo. I am a certified financial planner practitioner and the founder of Imperio Wealth Advisors. We have helped countless medical professionals, business owners, and high-income executives implement advanced retirement contribution strategies that have helped them save substantial amounts in taxes in a single year. In this video, I'm going to show you how these strategies work, who they're right for, and the specific tax advantages they could deliver. This isn't about some questionable tax loophole. These are legitimate strategies that the ultra-wealthy are using today. So if you're tired of writing those massive checks to the IRS every quarter, stick around. This could be the most beneficial 10 minutes of your financial year. So let's start addressing first the problem with standard retirement planning. Most high-income earners severely underutilize retirement plans because their typical approach is having a basic 401k, the contribution limit for which in 2025 is $23,500. And for those that are age 50 and older, there's a $7,500 catch-up. And for those 60 to 63, there's a super catch-up available of $11,250. Now, as a business owner, you may be already savvy enough to know that you want to have a match in your plan, and you currently implement that along with probably a profit sharing. So let's go over the numbers. The total combined employee and employer contribution limit for 2025 is $70,000, which is an insignificant tax impact for somebody earning north of 500k. So what this means for your tax bill, if you're a 500k plus earner, this is going to have limited effect on your overall tax liability, leaving anywhere between 100 to 300k plus in potential tax advantaged retirement plan contributions on the table. The higher your income, the more significant this missed opportunity becomes. So how do we approach this? We utilize the advanced retirement stack strategy. We layer multiple retirement vehicles for maximum impact. We begin with maximizing traditional qualified plans and then add some more sophisticated structures on top. Let's discuss the cash balance plan. What is a cash balance? It's a defined benefit plan that in layman's terms acts like a supercharged 401k. It combines the features of defined benefit and defined contribution plans, and it can be implemented alongside your already existing 401k. The contribution limits are based on age and income. So for instance, someone age 45 could potentially have a contribution anywhere between $180,000 to $250,000 annually. Someone 55 and older, the potential contribution can be north of $300,000 every single year. By contributing into these plans on a pre-tax basis, what a business owner can do is defer substantial dollars and therefore reduce their current tax liability. So what are the benefits? As I've stated, higher contribution limits based on your age and compensation. There are required actuarial calculations, but they're worth the complexity. And in some cases, the contributions can exceed $300,000 a year. The key advantages are that you get to accelerate your retirement savings. And I want to stop there for a moment because for entrepreneurs, in many cases, in the initial years of the business, you're typically taking all of the business profits or a sizable portion of it and reinvesting it into the business, leaving little room for retirement savings. But if you are the owner of a well-established business at this point, this presents you with an opportunity to accelerate the retirement savings that could not be done before. That presents the opportunity for potential large tax deductions now, and again, catch up for those behind on retirement savings. Let's talk about some of the disadvantages. A defined benefit plan is more complex to administer and generally has higher fees. The plans require annual contributions, and you as the employer bear the risk of the investments. Now, the approach that we believe in is combining strategies for maximum impact. The hypothetical advantage of a comprehensive approach. Let's use an example of a medical or dental specialist earning $1.2 million a year. If they contribute to the standard 401k along with a profit sharing, as we discussed earlier, but the limits for 2025 are $70,000. Let's assume that they also incorporate a cash balance plan to their existing defined contribution plan. Now that contribution could hypothetically be $320,000, which when combined with the profit sharing and 401k provides a total pre-tax retirement contribution of $390,000. So the first year tax savings approximately at the federal level are of $144,000, assuming the current 37% top federal rate. And the savings could be higher if you live in a state with income taxes. California, for for instance, can go as high as 13%. So this could represent an additional $50,000 in savings, assuming that you're in your state's top bracket. Beyond the cash balance plan, let's talk about the Mega Backdoor Roth strategy. This is for those who want tax diversification in their retirement income, and it combines traditional pre-tax savings with Roth advantages. Essentially, what occurs is that pre-tax contributions are converted to Roth, and that allows you to continue growing your funds on a tax-deferred manner and provides for tax-free withdrawals if specific conditions are met. There are implementation requirements, there are specific 401k plan features that need to be added, and an after-tax non-Roth contribution option as well. In-plan Roth conversion capability must be also a part of the plan, and not all plans offer these features, but we can help you navigate the process. Now, the strategic considerations of taking this approach is that, again, you have tax-deferred growth and tax-free withdrawals in retirement. This can serve as a hedge against future higher taxes, and from an estate planning standpoint, it can provide advantages to your beneficiaries. Now, additional benefits beyond tax savings of combining these sort of plan structures are: 1, asset protection from creditors, having accelerated retirement savings, wealth transfer advantages, and plan flexibility as your income fluctuates. Now, there are some common misconceptions and limitations about these plans. These plans are not a fit for everyone. They require consistent high income. Those business owners that have a staff may have contribution requirements for the staff as well, and it could be challenging to implement these plans in a rapidly growing business or practice. So, in order to ensure that everything goes smoothly, coordination with your financial, your tax, and legal advisors is essential. Now, let's talk about the critical implementation factors. A proper plan design that is specific to your situation must be the foundational stone. Also, a professional administration of the plan is required, along with annual actuarial calculations and compliance with IRS and Department of Labor regulations. So there you have it. By strategically combining 401ks, cash balance defined benefit plans, and Mega Backdoor Roth strategies, high-income earners can potentially save in taxes while building substantial retirement wealth. These are legitimate retirement vehicles designed specifically to incentivize retirement savings. Now, the major difference between overpaying six figures in unnecessary taxes versus using these strategies comes down to having the right team who understands the nuances of tax-advantaged retirement planning. At Imperio Wealth Advisors, we specialized and are experienced in helping entrepreneurs, medical and dental professionals, and high-income earners to implement these specific strategies. So if you're earning over $500K annually and you want to see if these strategies could work for your specific situation, click the link in the description to schedule a strategy call with me and my team. On this call, we can analyze your current retirement structure, identify potential tax savings opportunities, and determine if these advanced strategies make sense for your specific circumstances. Thank you for watching. Please hit the like button, and for actual wealth planning from an actual certified financial planning professional, subscribe.